these guys are out of your wheelhouse, right? The average person, you're never going to your point of this is the world we live in. This is the world we live in. And, whether you like it or not, and whether it's, uh, you know, Bernie making a ton of money and going and buying multiple houses, or whether it's Trump doing this type of stuff, the government and politicians they're going to make their stack.
Tired of trading your time for money? You didn't go to school just to sit in Zoom meetings until you're 65. At Vondi Capital, we help high earners like you shift from active income to passive cash flow through self-storage real estate investing. No more begging for promotions. No more side hustles that own your nights and weekends. Just mailbox money. Want to see how it works? Book a free escape plan at vondicapital.com. That's VONDIE capital.com. Podcast listeners, skip the wait list. Welcome to Control Alt Invest, where we're pressing the reset button on the world of wealth creation and investing. I'm Jason Vondersmith. I'm here with James Goodwillie. James, how's it going?
Good. Going great.
Today, I already let the cat out of the bag that I know what we're talking about, so I can't ask you what we're going to talk about today.
Yeah.
Today is an exciting moment. It's our first topical episode. We've kind of stayed away from that, but I think this is going to be a really good one to do.
Yeah, I agree. It's all over the place right now and fits into what we like to talk about.
It certainly impacts everyone's bottom line, as we've seen. It's been really good timing for our 401k episode that we always refer back to.
Yeah, those downloads are definitely jumping up.
Yeah. I was talking to a buddy of mine the other day, and I was talking to him about a self-storage investment, of all things. He had interest, and then he was like, well, I'm sort of down right now.
Yeah.
Maybe it's becoming clear, but today we're going to dive into tariffs, the T word. That's going to be the word of 2025 is tariffs.
Yeah. Oh, yeah. Has to be, right?
Yeah. And so I want you, because you're a smart man, to walk us through what they are. But I had this thought that I wanted to lead with, which I think is really funny. And I mentioned on a different podcast that I like thinking back to, all right, how did it all begin? And if I put myself in the president's shoes, and he is who he is, I picture him getting on Chat GPT and being like, how do I get China to negotiate with me?
Yeah.
And it just says tariffs.
Tariff everybody.
Yeah.
Yeah.
And then you go, okay, that's good. And then the only thing out of his mouth is tariffs.
Yeah. Yeah.
So
God, that's a funny picture to imagine.
the art, it's like, just picture him typing, hey, if you were the writer of Art of the Deal,
Yeah.
tell me how you would get China to negotiate with you. So I know a little bit about tariffs, but I know you know a lot about tariffs. So maybe we can start with a naive look at them and what they are and what they're used for.
So it's the bottom line is they're just taxes on imported goods from other countries. So there's kind of two types. You can just put a percentage of them and say 10%, which is what's been happening now, right? China, I think, is at 125% or whatever. We had the newest rebuttal tariff rate is. And so it's just a percentage. And the other one is just a flat fee. So you could say $10 of every ton of steel that's imported is going to be going to come to the government. But it's essentially just a tax for the government to make money on goods that are from another country coming into America.
Okay. And so it's a way for the government to get revenue. But I think if it's the 1800s, 1500s, and because it's so simple to think of plastic goods flying across the country. But if we're talking about rice or, like you said, steel, and these are on ships going back and forth.
Yeah.
Why as a American president do I say, hey, other country, you can sell your rice here, but why don't I just say, hey, come here and sell your rice, no problem?
Could be a ton of different reasons, but usually it is one of two. One, you want to promote or growth in your own country, right? So you want people in your country to make the rice, and you want you don't want to rely on another country for that rice, right? Because if they produce that rice faster, better, cheaper uh, than your rice, then and then one day they're like, well, this other country is giving me a heck of a lot more money for that rice, or no more rice for you guys because we're at war or something. Then immediately you can end up in a situation where all of that supply gets cut off. So you try and promote growth of that certain industry in your own country, or it's used as a just purely negotiation.
Okay. And so the other country says, I've got a lot of rice. I cannot sell it to only my population. So I'm going to ship it over there. And they're happy to pay whatever it is, the 10% to get it in the door.
Yeah.
And so now I can make money off that. Perfect.
Right. Yeah.
Okay.
Yeah. Like early America, that was like our biggest revenue source.
Okay. And that's what I was going to get into, because as I was trying to understand this whole deal, outside of laughing at the other person who doesn't know what's going on with these things, I saw that it used to be 90% of government revenue. Then we got into income taxes, and then we got the World Trade Organization. These are broad strokes. So if we talk about the history of tariffs, because what I want to do as we go through this episode today is take a historical look, because I think that, I mean, the economy is different now, right?
Sure.
It's
Sure.
way different than the first time anyone said, I'm going to tax your bananas coming in the country.
Right.
That was a subtle shift from rice to bananas.
Yes.
I do remember in school, I don't know if you know this, I'm an economics major.
I actually did not know that.
Yep. My undergrad was economics. I don't know why. I focused on accounting, took a lot of accounting classes, and that's a way for me to explain away why I'm not an expert in economics. But if anybody asks, I have an economics degree.
Okay.
Take me through old school, how we went from tariffs generating revenue to income taxes to this idea of free trade. And where I want to go with this is, you tell me if this is fair to say. Our current president and his base are aggrieved for years of someone's pillaging America.
Yeah.
Could be right, could be wrong.
Sure.
But take me through how we went from tariffs, income taxes to World Trade Organization, and how over the years that has made this large swath of people feel like we're getting a raw deal.
All right. I'll try and explain it as easily as possible. But like I mentioned, early America, we weren't really producing hardly anything. You know, we had certain exports. We had cotton and corn and things like that. But we were a very, very new country. We didn't have industry. We didn't have any of that. So Alexander Hamilton, just like the play, notorious federalist, right? Bigger government to protect its people kind of thing. And basically the opposite of Jefferson. He was a huge supporter of tariffs. Early America, that's how we got most of our income. That continued to rise. And what it did is it kind of shifted that balance in America, where the average folk that couldn't import tea because it was too expensive would say, you know what, we'll just start making coffee, or we'll start growing tea, or we'll do whatever and doing it here. That's a broad stroke. I don't know if they actually grew tea, but you get the point of They started doing it here. And over time, as we all know, the American consumer and the American industry grew and grew and grew and grew and grew extremely fast. And so what happened is there was this kind of scale where a lot of our government income was coming from tariffs because we didn't have any industry. And then as American industry grew, the government realized that, wait a second, the consumer is making a lot more money than we are off of charging other governments for their goods.
Do you think it's fair to say that Hamilton's tariffs was a motivator? I do remember macroeconomics with subtle things to motivate a population in a certain way. Do you think
Yeah.
those tariffs are why industry in America grew?
For sure.
For sure.
Yeah,
Okay.
absolutely.
Okay.
100%.
All right.
Yeah, and that was one of his reasons behind being such a huge supporter of tariffs, is because he saw that, and he was an incredible economics mind. Anyway, so
I remember learning about him in college.
yeah,
The famous economist
Alexander Hamilton. Yeah, right. Yeah. So, anyways, he, like I said, we're taking in less money than the American consumer is bringing in, and so that's when we started to kind of look a little bit harder at taxes, right? As being a way to start getting a piece of that pie. The government said, let's try and start taking a little bit from the American people. Maybe we can open up the doors and then to more of a free trade type atmosphere. And then World War II came. Obviously, that decimated a ton of countries, and you had the Marshall Plan, and you had to we jumped in to try and rebuild half the world. And in order to do so, that's when income taxes really started to go up under FDR, and in response, open up this free trade door as a means to grow other economies, right? Before that, it was all, let's grow our own economy. Let's grow our own industry. Let's grow our own stuff. And it worked. But then because these countries were failed, right, and bankrupt and all this other stuff, and we had to rebuild them, we realized if we're trying to help them rebuild, but we're still charging them so much on these tariffs, there's no way they're getting out of this. So that's when you had organizations that were created to allow that free trade, which stimulated economy in other countries besides the United States. And then that's ever since then, that aspect of it, of the free trade side, has only continued to grow.
Okay. I want to get into free trade, but I think that it makes me think of we had a previous conversation around a lot of the war debt. I forget the year or the time frame, but I think it was after we defeated Germany with Hitler. There was conversation around how the hell they were going to pay off all this debt, because I think it was like reparations from whatever. Yeah.
Yeah.
And there was this whole conversation of people being like, they're never going to pay that. They can't.
Yeah.
I think they ended up just sort of finding a way to make it disappear. And I think that is an important note as we continue to talk about what wealth is and what money creation is. At the end of the day, it's not real.
Yeah.
It's really not real.
Yeah.
If we say, Germany, you owe us $100 billion, and they're like, we can't pay, and we go, all right, well, let's just do something else. On a micro, I think that happens on a micro level more than we really realize.
Yeah. It's like putting somebody in jail for 8 life sentences.
Yeah.
Right. Like, that's impossible, but we'd still do it. And you're right. I mean, you could get into the granularity of like the fact they couldn't pay that back is another part of the reason that they split off Germany into different countries and things like that. But yeah, at the end of the day, yeah, it's not real. It's just a number on a sheet.
Yep. It's a weapon. It's a
Yeah.
weapon. And, for economics, it's a way to motivate to do different things.
Yep.
So free trade. I heard Jim Cramer regretting his support for things. He's another, we talk about Dave Ramsey. Jim Cramer's another polarizing guy.
Oh, yeah.
Years ago, I read his book. I liked it. I was on the street or street guy or something. I thought it was interesting how he came up, and he likes the stock market. Like he's very passionate.
Oh, yeah.
But he was saying, I'm not a free trade guy. I'm not a free trade guy. But I don't have any context on that. Like why, can you tell me why free trade is either bad or not desirable?
Yeah, it's great if you are it's great in some regards. If you're a country that doesn't have regulation, right? If you're
Antigua.
if you're a country that has high standards for their citizens and the way of life and like you could say morals, but like regulations around what can happen, how things can be produced, what the emissions of a certain factory have to be. And there's another country that has none of that, and they're willing to let kids make T-shirts.
Mhm.
The
You're
it's
talking
great,
about China.
yeah, or Taiwan, or any of those. And it's great for those countries, right? Because they can take away that business. They can, like I mentioned in the rice, like better, faster, cheaper. Um, they can do all of those and take business away from the country that holds themselves to a higher standard or has certain regulations around things.
Put a bow on that for me. So I have morals,
Mhm.
and I'm not going to let my kids make T-shirts.
Mhm.
There's another country that wants children making T-shirts. What does put that in? How does that impact free trade? So I'm saying I don't want your kids' T-shirts.
It impacts free trade because if the country that has higher standards for themselves or higher regulations, however you want to call it, that country is making T-shirts currently, and then there's another country making them for half the price, twice as fast, and because they make them work an infinite amount of hours, twice as fast. They're better T-shirts, and they're 1/10 of the cost of the T-shirt being made in your country. Eventually, businesses are just going to go, I'm not going to use this factory. Why would I pay that? I'm going to go over here.
Yeah. So free trade, you're saying, would incentivize the corner cutting country. That's fun alliteration. By saying you can make them cheaper because you're exploiting children, sell them over here, but you tariff that, and that tries to level the playing field.
Yeah, at its basis, free trade is the ultimate expression of capitalism, right? May the best man win. You want to do it a certain way, go do it. But it's like putting crutches on yourself and then allowing everybody else in the world to operate a certain way, or have like the elite running shoes, and then you're running on crutches. It's even though at its basis, free trade is a beautiful thing. It can hurt you if you're shooting yourself in the foot.
We're a capitalist society, and we want to be this, the best man wins, unless it's not US, which I'm for. I don't want, yeah. I'm for that. I wonder how that manifests just in our own country, though. We're a capitalist country. People are trying to sell electric cars, and may the best man win, unless I can get myself in government and angle it so that I'm the best man despite what goes on. Right? Do you think that's fair to say?
Yeah. I mean, I think that's it. It is a part of capitalism, though, right? Like and that comes down to the argument of that end up in monopolies and things like that, right? Where capitalism created Rockefeller, capitalism created, Carnegie, right?
Yeah.
And so at the time, right, they were just operating within the boundaries. May the best man win. All right, those guys were the best men. They did whatever it took, and they won. But they created a monstrosity of a monopoly, and then you have Teddy Roosevelt and others that were like, wait, we got to get rid of this. There's definitely that balance.
So, we're a wealth building podcast, or we're at least trying to walk that line.
Mhm.
And we're talking about economics here. So let's get where do you want to go next? So I think there's two things we can talk about. One is how these economic policies impacts our wealth at home, or how is the economy, we can stay on the economy, and how is it different today than it was when Hamilton was putting on tariffs?
Yeah, let's start. Why don't we start with like how it impacts us, and then we can kind of talk about the economic factors and how tariffs might, there's more to tariffs than just the tax itself.
So great, and I'm excited for that. I think you were telling me about this, and I had to do more research because this is something I know a little bit about, but not enough.
Mhm.
All of this, we talk about how everything's connected. It's all interconnected. The impact. We did an episode on safe investments, and traditionally, the safe investment's a treasury bond. If I want to hide from the storm that is tariffs or whatever, I'm going to get into treasury bonds. This tariff news impacted the safety and the reliability of treasury bonds, yes?
Yes.
And so that has to do with bond yields.
Yes.
How does that all work together?
All right, so we can go down this rabbit hole. You mean from just a traditional standpoint, or do you mean like, do you want to talk about how it's kind of all goes together?
So this is what I know. And I like to test my assumptions. You tell me if I'm right or wrong. In a normal world, and maybe there is no such thing as a normal world, in the 80s or 90s, when things seem to be stable, maybe we call it stable. In a stable world, I have $1,000 and I want it somewhere safe. So I buy a treasury bond. It pays 5%. So that's the yield. So I pay $1,000 and every year I get $50 back, right? That's my 5% yield.
Yeah.
And I'm comfortable with that because I say in this stable world, the United States of America is never going to default. That $1,000 it's lock solid, safe. Might as well be in a safe. Great. Now interest rates start going up. And so my 5% becomes more attractive, less attractive, more attractive.
Yeah.
And so the higher yield, so the cost of money is going up.
Yes.
Okay.
Cost of borrowing money. Yeah. So the government is paying you a higher percentage to borrow your money.
Great. Okay. So I see. Okay. So now I can get a higher,
right.
I can get a higher rate.
Yep.
But that means that things are more expensive. Maybe I should stop figuring this out live and you explain it to me like I'm a 4-year-old.
You're exactly right. I mean, there's kind of you take a step back and there's a entity, obviously the Federal Reserve. They're in charge of their dual mandate, right? And the biggest part of that is the inflation rate and keeping that under control. And so their target is 2%, keeping it there. And really the only wiggle room that they have, because Treasury can print money and they can do all that stuff, but the Federal Reserve cannot. The only thing that they can do, increase or decrease the rate, that federal funds rate. They can increase or decrease that rate that is what anyone borrowing money has to pay. Banks, credit card, all that, right? What they have to pay. And so by doing that, if costs are already super expensive and inflation's super high, then the lever that they pull is they'll increase the rate that they require people to pay, like banks and stuff like that, in hopes that it decreases demand and people pull back a little bit and all of that, right? Like if a bank, and kind of the way that to think about it is, if a bank wants to borrow $100 million and they want to go play with that money, they may take more risks because rates are so low. Whereas if they know that they have to pay everyone who has a savings account, they have to pay them a certain amount, they know they can't take as many risks. They can't do things like that. So yeah, that's kind of when rates go up and down. And then if inflation is really low, then they can lower rates. Or if they want to stimulate the economy and kind of boost it up, right? COVID, things like that, they'll crank rates down significantly.
Okay. And so with all that, it's basically, and because tariffs make things more expensive, with the bond yields and whatnot, other things are more expensive.
Yeah, across the board for the most part. Yeah.
Taking risk is more expensive, and you're less likely to take risk.
Right. So it's better for the consumer in this talking about like wealth and stuff. And safety. It's better for the consumer at that point to have your money in those things than the stock market, right? That's why when the Federal Reserve jacks rates up, typically stocks will go down, right? Because it's kind of not a great thing for stocks. And then if stocks are going up, typically the yields will go down.
Yeah. And so bringing that to today and what that means for today, because we're sort of talking about, this is our first topical episode. The idea behind the tariffs, and America's getting a raw deal, right? Going back to why all of this started. Trying to make things better for the consumer. When the tariff news came out, there's so much uncertainty. The bond yields went down, making things more expensive at home. It feels like we're cutting off our nose to spite our face. And it's almost like when you went to ChatGPT to say, how can I get them to the negotiating table and do better. It didn't give you a great answer. You should have typed in again and be like, are you sure?
Yeah.
And then it goes, oh yeah, no, I have no idea.
Yeah. Yeah. So it's definitely more complex, right? I think that's the goal, right? Or at least how it should work is in theory is people would fly to safety, right? You tariff that like if you're looking at the economy and you're saying the 10-year is way too high. So let's go ahead and try and get that down. And the Federal Reserve is not going to drop rates to get it down themselves. Typically, conventional economics would be, let's drive people to that safe thing, right? The more people that buy the 10-year treasury bills and stuff will get that rate to go down, right? It's kind of like the opposite. If you buy a ton of stock of a company, a bunch of people buy a stock of a company, that stock price goes higher. If a ton of people go buy the treasury bill, the 10-year rate drops down, right?
Mm-hmm.
So the conventional wisdom is let's get people to safety and kind of force that hand. And if they did that, stock would go down, people would fly to there. What happened, and kind of this is how it's a little bit bigger than what most imagine, is two things. One, we allow foreign entities and countries to buy our own debt, so they can buy the treasury bills. And obviously one of the largest is China at almost, I think they're like 700, they own like 700 billion of our treasury bills.
That's who cares?
Yeah, right.
Because money's not real.
Right. So while I'm sure that did work to the average investor, they said, well, I'm going to go something safe. What happened is we just tariffed the ever living shit out of a country that owns 700 billion of those things. And so what they did is, in retaliation, they sold a shit ton of it, which made it so that the actual 10-year went higher instead of lower, which is kind of the people looking at it would be weird. So that's kind of one. We allow foreign entities to buy our own treasury instruments. The other thing is we allow investors, like actual institutional investors. We've talked about leverage on our past pod, using other people's money to make yourself more money. We allow institutional investors to lever treasury bills and our currency 100 to 1. So they could take, if they only have $1 to their name, they could place $100 bet on the treasury bills. Not great. Whereas in stocks, they could do a 10 to 1, right? That's kind of the max for equities.
That's SEC law, you're saying?
I don't know if it's an SEC law or what, but that's the
regulation.
Yes, that's the regulation. Yeah.
Okay.
And so what happens is everybody that is wrapped up in the stock market knows a lot of banks, hedge funds, and so forth are highly leveraged in the market, right? So if there's a lot of uncertainty, the first reaction is, well, we have to protect ourselves. Let's pull it out, right? Let's just make sure we don't get absolutely killed. So if you have a 10 to 1 leverage in an equity and 100 to 1 in a treasury, and and China starts selling the ever living shit out of their treasuries, most likely you're going to go, oh my God, I got to sell these too. So the conventional wisdom of what would happen in a normal world with bonds and stocks is not exactly what's been playing out.
Who would have seen that coming? That when you put these tariffs on, that the country you put them on is going to have some sort of retaliatory action. It's almost like the art of the deal only works in real estate or in a microeconomic situation.
Yeah. If that's, yeah. And so if that was, unless you knew that it was going to happen, and I could talk.
We'll get to that. Yeah, we'll get to that. Well, no, of course he didn't. He doesn't know. That's the thing. And this is where I want to go with this. We all know he's a character in a show. That was his greatest thing, was you're fired. There's got to be, what they say though is there's other adults in the room.
Sure.
The rest of Republicans go, we're not a political podcast. I hesitated to say Trump. I hesitated to say president. I had to say Republican.
Well, it's impossible to do this podcast without talking about that. So I think it's fine.
But they go, he is who he is. He has these taglines, but he wants good for the country, and I don't disagree that he wants good for the country. So you say that, okay, there's adults in the room. Who's an adult in the room that? Well, we know he doesn't listen. Number one, so he's going to do what he's going to do. But who is an adult in the room that maybe has some experience here that we would expect to say, maybe we don't do that.
Yeah,
Or
I'd
maybe we do it
say
differently.
his treasury pick, Scott Bessent.
Okay, tell me about Scott Bessent.
A lot of people in the Trump administration are huge Trumpers. They're notorious Republicans or even not Republicans, just very, very big Trump supporters. Scott Bessent, probably you would look at him and be like, oh, he's just another gray-haired old white guy that is for Trump. He may be a Trump supporter, but he's at the end of the day, he has been with everybody. And so a little backstory on him. We've all heard George Soros, right? Everybody knows who George Soros is, regardless of what side of the aisle you are on, notorious for funding liberal and Democratic campaigns and all of that. Soros made a ton
Depending on where you're at on Reddit, he's done other things too that are a bit nefarious.
Yeah. You can, the 4chan, you can go down a lot of rabbit holes on Soros, but regardless, he made in 1982, his firm made a huge bet against the British pound. Long story short, his firm figured out that they were doing some shady stuff and kind of propping up their own valuation. And so he took a short against it and made like $1 billion in a single night in 1992.
Nice. We've all been there.
Yeah. Scott Bessent was his right-hand man that did that. He was the one who called it. He was the one that was right there lockstep with Soros and worked for Soros. And then when Scott Bessent left Soros's firm, Soros was the one who funded Bessent's new firm. So this guy, yeah, he does work for the Trump administration, but regardless, he also was, BFFs, or at least incredibly close colleagues to one of the most notorious Democratic funders ever. So I'll start there. But this guy knows currency. He knows currency very, very, very well. And he knows debt very, very, very well. He knows big picture economics in terms of a country's debt.
Macro.
Yeah.
I learned that in college. It's macroeconomics.
There you go.
Thank you for allowing me to hit you with these jokes. I
know
you're
killing it.
You are on this. I love where you're going, and I know you don't want me to interject with these stupid jokes, but I appreciate you letting me do it.
Yeah,
anyways.
I had to make your teachers proud.
Yes.
Your professors. Yeah, so he knows countries, he knows debt, he knows currencies, and macro points, right? Very, very, very well. And so one of the reasons I think that Trump brought, whether you think Trump's smart or you think he's an absolute moron, regardless, he was brought in. And I do think he is incredibly smart at what he was brought in to do. And so if you take a step back and strip away tariffs, and we'll get to where tariffs plug into this, you take a step back, you look at America right now, right? We printed a ton of money in the last administration, printed a ton of money in Trump's administration. We've essentially been racking up infinite debt over the years. Well, we don't just get it for free, right? Because of the treasury bonds and the rates that are out there, we have to pay back that debt. And so we're at the point now where our debt is so high and the rates are so high that our debt payments are bigger. The debt payments are bigger than what we're bringing in. Is kind of the best way to look at it. So it's an impossibly sustainable route, right? And the only option is take on even more debt to pay your debt, which obviously, would have Dave Ramsey freaking out, right? Or change things, right? You make more money. That takes a while. You drop the rates, but the Fed's not going to do that because they have a mandate, and they don't. If inflation's up here and it hasn't gone down, they're not dropping rates.
A mandate by Congress?
Yeah.
Yep.
And so you can't force the Fed to drop rates to then refinance your debt at a cheaper rate and pay less money. So there's certain things, or you can cut waste, right? You can, what they're trying to do with Doge and Elon and all that, trying to cut the waste. That's one way you can make more money.
Trim expenses, yeah.
Yeah. But at the end of the day, the debt payment is the issue. And so when I mentioned earlier to when you said that, how could you expect it if Besant, and it's a big if, right? If he did know what he was doing and kind of saw this, then he probably looked at three things and said, these are the three things that we can do to turn things around. One, prevent a massive market crash because of all these debt payments and the skyrocketing government debt. That could put a lot of pressure on American companies, could put a lot of pressure on the dollar, and which then obviously puts a lot of pressure on banks and hedge funds and all that, who, as we mentioned, are levered to the tits. Huge leverage. There's a ton of ton of pressure there. If that crashes, we're screwed. So handle that. Number one, get them to kind of de-lever themselves and get back to balance on Wall Street. Number two is our own dollar and our own the rate that we're paying for the debt. We got to get that lower. We have to refinance that somehow and get rates down. And then number two is China and how they are in a fairly weak position right now in their own economy. Yet a ton of other countries have put a lot of investment into that. So if he's looking at that, what do? I know Trump wants to tariff the ever-living shit out of people. So what if my goal is to let him do it and say, this is a great idea, with China being really the only focus, right? So let Trump do whatever he wants. But if I can convince him that like China's the only focus, let's strip everything else away, then we'll go out, we'll launch tariffs on every single country, and then that'll get people to the drawing board and make Trump happy. Then he comes around and says, these people are at the table negotiating our tariffs and all that. We're going to keep China's tariffs, but everybody else's tariffs, we're going to kind of pause and we'll work with them. That's going to cause the economy or the Wall Street to sell, right? They're going to de-lever their positions, just like I talked about, that 100-to-1 in treasuries. They're going to say, oh shit, I got to sell these. We're going to keep some cash on hand, right? And that's what we saw. Stock market plummets. Everybody on Wall Street pulls out money. They're holding cash and cash equivalents and things like that. Check. Number two, crush China's economy. First, they obviously have to sell our treasuries. They sell our treasuries. They get crushed over time with the tariffs. We survive. And then the reciprocal action of that is people will, their currency, the Chinese currency will drop, and people will fly to a safer option, which is the U.S. Treasury bills, which then lowers rates. We refinance the trillions of debt that we have, and there we go.
Back in business.
And
you think that's Besant's kind of strategy, or at least what he wanted to try and do?
Yeah, I would say, because it's almost the opposite of what happened when he shorted the British pound.
Okay. And do you think,
if he was an investor right now, sorry to cut you off. If he was an investor right now, he would probably be shorting the ever-living shit out of China's currency.
China's currency?
Yeah.
Okay. Well, what about ours? Do you think he likes ours? Or you think these policies make it so that he can like ours?
I think he's trying to crush China's because of, how a lot of companies, they started to use China's currency when trading, right? Like ours was the gold standard, right? You buy oil, any country buys oil, they use the dollar. So a lot of other countries, and you might have seen these in headlines, like I can't remember how many years ago, but other countries started saying, we'll pay in Chinese currency instead of the dollar now. And so they switched off of our standard. Obviously not great. I think he's trying to crush China's currency, just de-lever the stock market, just crush China's currency in order for people to then flock towards the safe U.S. assets, which then drives prices down and allows us to refinance our debt and gets us out of the hole that we're in of impossible runway.
Got it. I like that. And that's, I've seen him on TV mumbling and saying, I don't know. Let's see what happens.
Yeah.
And I'm fine with, you don't give away your whole strategy via signal to the world. You know what I'm saying?
Sure.
So I don't mind him being coy, but when you look at him, you you go, that's that guy.
Yeah.
So,
He does not have a way with words, that's for sure.
but I think there's another angle here, and this will be a little bit of a pivot to me. And I'll say this, that what you just walked through is fascinating to me. And I'm sitting here like kind of as a cheerleader, like, yeah, crush China, like, whatever.
Sure.
I think there's a little bit more, and maybe here's what I think. I think that when Trump evaluates this stuff, the first thing in his mind is what's in it for me. When, let's say Scott Bessent proposed this strategy and Trump goes, what's in it for me? I think of these headlines and his tweets and they're already having this conversation, which I'm very impressed with. It feels a lot like just a bit of market manipulation, because if we are trying to do what you said and crush China's currencies, so we're in a position of power, which I'm all for. I'm for that. He comes out with tariffs everywhere. Stock market gets predictably crushed, right?
Yeah.
Like that was never in doubt that was going to happen.
No.
Right. Then there's the rumored headline about the pause, quick spike. Then there's the tweet, now would be a great time to buy stocks. And then the actual headline came out a couple hours later, right? Do I have this timeline right? Yeah. And so I'm impressed that Congress and the people that are in charge, should be in charge, are trying to be in charge, are already asking questions around this looks like market manipulation. Because it absolutely does. I don't want to just keep going back to our different pods and all the bullshit. But I get mad. It really makes me mad. I don't think you can just explain it away as, well, that's the world we live in. This is wild. Like, do you think I have a right to be angry about this?
Sure.
And maybe label it as market manipulation?
Sure. But that's yeah. And that kind of goes back to, yes. I mean, I think everybody can have any opinion they want, right? Because it's not necessarily, they're playing outside the rules as you understand them or as I understand them. But that's kind of the theme that we've talked about in a lot of our podcasts, right? These guys are out of your wheelhouse, right? The average person, you're never going to your point of this is the world we live in. This is the world we live in. And, whether you like it or not, and whether it's, Bernie making a ton of money and going and buying multiple houses, or whether it's Trump doing this type of stuff, it's the government and politicians they're going to make their stack. Regardless of who's in power, regardless of the policies, regardless, right? And nothing any of us can do is going to change that. And regardless of what side of the aisle you're on, so it goes back to that issue of like, what can I do? What is good for me, not necessarily getting caught up in these headlines and stuff. I think, sure, Trump probably said what's in it for me. But if I was to take a guess, I think he looks at things in a way of like, yeah, what's in it for me? But also like, how can I get what I want politically out of it as well, right? And everybody knows that he has been just absolutely talking trash about how America is getting ripped off by other countries. And so if Bessent walks in and Trump's original plan was like, well, let's just tariff China and tariff a couple other countries like Mexico and Canada to get the ball rolling. And Bessent walks in and goes, what do you think about tariffing every country? Trump's eyes probably would light up and we're like, hell yeah, let's do that. It's politics. It's government. It's all shit.
Maybe I miss the time when it was all actually subtle and under wraps. You know what I mean? Like this is just blatant.
Yeah, and that's because of the internet age, right? We all know what's happening instantly.
Yeah, maybe. This is the first president who was very clear that he wants to make it public, via tweet.
Yeah, but I mean, there's a very, very good reason that no senator, no congressman, and no president in U.S. history has left office and 5 years later was poorer than when they started, right? Whether you like it or not, Pelosi has made $1 gazillion since she's been in office, and so has Dan Campbell on the right.
Yeah, but you don't have to rub my face in it. That's what I'm saying.
Yeah.
When they did it, I was like, oh, wow, And there's never, again, people are going to people. I think I really like when we did our 401k episode and you were talking about the person that's about to retire. They're days away.
Yeah.
And they're looking good. And then this roller coaster ride, I think maybe they can, maybe in another world, another time, they would be like, oh, well, that's just bad luck. The way it's happened, at least this past week or two, it's like it's just rubbing your face in it. Like your 401k just took a dump. You might need to postpone your retirement. I don't care. You also don't have money to participate. If you're like, okay, well, this is going to rubber band back in like 3 days. I can't participate in that upside. I'm just getting back close to even.
Right.
While you tweet out, now would be a great time to buy stocks. Well, I fucking can't because you just killed all my.
I don't have any
Yeah,
cash
you kill my shit anyways.
to do it.
Right.
Yeah. Unless you're your manager or whoever you have your money with, unless they saw this coming or had a certain percentage in cash or whatever to hedge or whatever.
Yeah.
But I'm sure that was not the case for many. But yeah, it just goes back to that point of no one could have 100% predicted this. You could argue that Buffett did. That's why he has like $300 billion in cash equivalents just sitting there, right? But you can't predict this. And even if you had your money in treasuries, like you think it's safe, and you don't understand that the vast majority of treasuries are owned by.
What can't you predict?
You can't predict the market volatility of these things, whether safe and it's or not safe, right? The quote safe of U.S. treasuries, and you have it, and you were about to retire, and you worked your whole life, and you're like, I don't want to. I want to keep it in cash under my pillow.
You mean you as the common person?
Yeah, as a common person.
Okay.
Yeah, and you're like, I want to have cash under my pillow, and then you get with this this financial planner, and he's like, well, how about we just put them in treasuries? They're super safe, all that stuff. But he doesn't tell you that the vast majority of treasuries are owned by foreign countries. Then we tariff the ever-living shit out of the largest of those countries, and they sell tens of billions of dollars, hundreds of billions of dollars in treasuries, and now it's
Right.
even worse, right? Whatever, however you want to explain it away. But I think the moral of the story is
Yeah, you're making a large assumption that your financial advisor knows who owns the majority of U.S. treasuries anyways, which, depends where you go. I also go back to just having agency in your own retirement or wealth or whatever. When you participate in the stock market or even treasuries, you're giving that up. You're right. You don't have a way. When you were talking about predicting it, I thought you meant there's no way for the people that are pulling the levers and the macroeconomics.
Oh, sure.
Like they saw it, and that's I thought you were saying
hopefully they
there's
saw
no way to predict it. Like you would, yeah.
Yeah. And kind of bringing this full circle back, back to tariffs, right? Tariffs in general they will touch every industry, right? And I think, even real estate and land, there are safer bets there. But yeah, the backbone of tariffs is, and I think this is kind of where things get a little hairy and dicey, is what's our timeline for those tariffs, right? There's no doubt in anyone's mind, right? Obama advocated for them. Pelosi has advocated for them. A lot of Republicans have advocated for them. Schumer at one point, right? There's a lot of both sides of the aisle understand tariffs work. They drive growth in the country that is implementing them. They drive income for that, but it has to be done over time, right? So if you're Nike, and I mean, most people have seen this of Apple flying plane loads of iPhones out. Have you seen that? So when the tariffs were announced, Apple went and loaded up, I think it was like 5 jumbo planes filled with iPhones and flew them to America, right? Because like they needed excess supplies to handle that because they were about to get crushed in tariffs, which is what happens when you do things so abruptly. And so like that's great for Apple, who has $800 billion in cash, and they can go do that. But what about that guy that just started this shoe company and is doing like $2 million a year, and half of his stuff is made in China? He doesn't have the cash to do that. And then overnight, he gets slapped with a massive tariff.
I saw one of the funniest memes I saw was somebody, after the tariffs were put on pause, somebody, a character going, well, what am I supposed to do with this factory I just built?
Yeah.
Like,
Yeah.
it's like, that's what it's supposed to do.
Yeah. It's very, very difficult. And so things like tariffs, they take time before the positive outcome is reached, and doing it so abruptly can cause a lot of issues, right? I think Apple, right, they announced that they're going to start making a lot more stuff in India. And that's, going back to Scott Bessent, it's working out exactly like he hoped, right? That's going to crush China if Apple moves out and these other big companies and Nike moves out and these other companies move to a different country to make their goods cheaper, crushes China and all that. But things take time, and doing it so abruptly is not it.
So and I like the way you explain that all. That makes sense to me. And as you were going through it, starting to be like, okay, like I get this. You're right. It's way too abrupt. There needs to be some subtlety to that, because I think coming into this pod, my angle was, we're just cutting off our nose to spite our face. We're selling our bed to buy a bigger alarm clock. So I think the focus on these micro problems without an understanding of the macro issues is where we see all this up and down. So and you mentioned, what are you going to do as the common person or somebody with a business? I think if you do, like you said, if you have a business with, I'm selling shoes or anything that needs to be manufactured, it's a scary time.
Sure.
But there's certainly businesses you can get into that maybe you're not dependent on the stock market, and you're,
there's ways to get around it. A lot of people I've talked to that have businesses that make things overseas have moved contracts to a net 60 contract, right? To say, well, as long as the situation gets resolved in a certain amount of time, maybe there's some wiggle room there if I do it this way. Or others have started using like bonded warehouses, where they will go and ship their products to this warehouse in a non-tariff country, and the products only get hit with tariffs when they leave that specific warehouse. So it kind of buys you that time as well. And so there's people are adapting, and it shows the resilience of these small businesses and stuff. But at the end of the day, it still takes time, right? And whether you're a small business or whether you're Apple and you're moving stuff to India, it takes time. And so I think tariffs as a whole aren't necessarily the devil. They're not the end of the world, especially because almost every country in the world tariffs us on imports. So they're not the worst thing, and they do work, but it just you can't do it via tweet unless you just want to blanket get everybody to the negotiation table immediately, and so that's your way of doing it.
Yeah, and I think there's a whole national security issue here too, which I've really, and I don't know how much tariffs impact the bottom line there. That could be a future episode, but reigning in China for sure, and them pillaging our, Kevin Leary, I think actually a lot of, when he says things, what I'm talking about, right? It's Kevin, Is it O'Leary or Leary?
You talking about like the bald guy on Shark Tank?
Yeah.
Yeah, I don't remember.
He says some stuff where I just roll my eyes, but he was going through it the other day and talking about how, if and you mentioned it, if the idea is just to crush China, let's do it, because they have been stealing our secrets, company secrets, and all that.
It'll be interesting to see how it plays out, but I'm glad we covered this, because I think a lot of people listening probably have just looked at the headlines or just looked at the articles of what people are writing, or looked at X or whatever, and just looked at the very topical level of like, we had a bunch of tariffs on the whole world and it crashed my 401k, and without thinking about a little bit deeper. And then the others who are like, yeah, finally we're doing it. Well, there's a lot of repercussions, guys. Like, maybe if we're going to do it, maybe we do it right. Maybe we do it a little bit prolonged as opposed to immediately. So yeah, I think it's good that we did this to kind of hopefully demystify tariffs a little bit.
Absolutely. James Goodwillie, fascinating conversation. Control, Alt, Invest.